Pashupati, a lot of talk on how this rally and the sustenance of this rally is questionable because none of it is being supported by the actual profitability of companies. It's only liquidity driven, and that probably will dry out at some point. Not putting a finger on when, but would you question this rally?
Well, I think you've summed it up perfectly by saying this is liquidity driven. I've always been a believer in liquidity driving our markets. And one of the main things that's still happening is that SIPs are still coming into the mutual funds and they're obviously continuing to buy. Some of them are buying more of the same, but I think there is a trend to move to good quality mid caps, and I think we're seeing that right now. I mean, even the names that you were just mentioning, a lot of them are solid companies with solid businesses. Overall, I think that our market is a follower market. It's not a leader market, and all global markets seem to be doing well right now. So we are going along with them, and central banks seem to have liquidity, so they're pumping it into the system. But I think the FI flows are slowing down. So that's one of the other challenges because money, I think, is going back to the US. I mean, just look at Apple. It's gone from 200 to 300 in the last 4 months. So would you need to sort of be in anything else?
Yeah, Tesla maybe.
That's done even better.
Yeah, no, but that is a true, Pashupati, and the fact that there is no visibility of the central bank in the US even, or the Fed pulling back this liquidity, because you've just about started seeing PMI data improve. The moment you start to withdraw that liquidity, you're going to see growth numbers starting to come off, and which I don't think is at this point something that they want to look at. So that is going to feed into liquidity, and that's going to continue to feed into the equity markets. From an India standpoint, foreign money is not coming in, and like you said, is going to stay with the US. So what is going to be the driver then for us?
Well, for us, obviously there is two pockets. There's money looking for places to go, and then there's money sitting in places where they don't want to lend. So I think that while it's looking for places to go, one of the areas it will come into is the stock market. Previously, a lot of this money used to go into real estate and into financing of businesses, but with the business financing looking riskier and also real estate looking like still looking like a mess, money is obviously coming into here, and you could even look at a high quality real estate player rather than buying real estate as an example, and you'll probably do better off.
All right, we've also got the budget coming up. The big challenge this time is going to be how to tackle this growth emergency that we're probably facing at this point. So you think that the government now really needs to focus on out-of-the-box ideas to make sure that they can spur growth in this budget? And what, according to you, will be those kind of measures that could likely do the trick?
See, I think that in my opinion, the government is quite comfortable with deficit financing. And frankly, one of the economic parameters has to go, and I think that's the one that's going to be thrown out. They have to do something bold. So, my humble suggestion would be to sort of radically cut GST, for example, at least for 6 months as a trial and see how it works. And if they get a combination of higher compliance as a result of lower rates, because one of the challenges is the rates are so high that people are finding it inconvenient, I would say, to comply. So I think that if rates were more sensible and in maybe single-digit rates, then that would be a real boost for markets and for businesses. But I think that's a little radical because that's 500,000 crores out the door or something if you take it for a year. If you were
also, out of the purview of the budget, you think the GST Council would do on the rates? What is it that they can do in the budget, though?
No, I mean, obviously, when you say budget, you mean the whole, they put railways in, the GST Council will meet right on top of the budget. So, but I think that there's no buy-in from the states as well, which is not going to help. So, you cut the rate, say you cut the rate from the average of 18 to 12, the states are going to say, fine, center, you absorb the 6, and that's not going to work. So, that's the challenges we have. I mean, that's the bad part of a democracy.
So aside from the taxes, anything else in terms of, probably taking a bigger fiscal hit to spur demand, to tackle the demand side issue rather than the supply side issue now? Anything that you feel that the government can do with this budget?
Well, they've been giving money to the bottom end of the population, the below the pyramid, the bottom of the pyramid. So I think that whether is there likely to be an income tax cut? Probably not. I think maybe the rates might go down, but the slabs will go wider because I think that there is inflation in the system. But I think that the real cut would be GST because, frankly, if we had no income tax and only GST, that's the way our country is going. I mean, that's the only way to catch all the cash money. So and the fact is that cash is back in the system. Unfortunately, we can't wish it away. It's still there.
It certainly is. Okay, what people can't wish away also is the kind of meager fate that seems to be awaiting some of these companies which are under a bit of a cloud. Pashupati, I don't like talking about Yes Bank as much because the retail crowd gets caught in. But with you, I would love to talk about it because you call a spade a spade. My question is, with all that's happening around Yes Bank, do you believe that there could be merit in even thinking of buying it, or would you reckon that it could actually go down as low as some of the price targets are suggesting, 25 rupees, 20 rupees, in some conversations even lower?
Well, now the foreign press is beginning to look at it, saying that if something isn't done with Yes Bank, it's going to cause a further financial problem to the country. There's actually an article floating around from Washington Post, which has just come out, which actually suggests that someone should swallow it and suggests pretty strongly that State Bank should be the buyer. I mean, I'm not in agreement with the article, but the reality is that I don't think we can afford another financial contagion at this point, because again, it'll disturb the NBFCs and the banks, and it'll hurt the whole sector and make people even more reluctant to lend. And that's, you're talking about the demand side. The demand side will disappear if that happens.
Okay. But as an equity investor, would you reckon that even if you have it under your portfolio, get out of it right now?
Well, I'd certainly remove my bank deposits from it.
But not the stock. You would keep the stock. Stock
is a different story. You're playing it for a different, it's a different speculation. No, okay. I'm not.
You're not playing.
Yeah, I mean, you're doing it for speculation. Whether you buy it at 40 or you buy it at 25, you're doing it with the speculation of doubling. You're not doing it with the speculation or losing your money.
Okay.
I think you're in that zone right now.
Double or quits.
Double or quits.
Yeah, I don't think it has anything to do with how the bank does or performs at this point in time.
Yeah.
So let's talk, since you brought up SBI, let's talk about SBI then. The initial excitement about resolutions, faster pace of resolutions, got the stock very excited. Stock's at about 330 right now, but not just talking about the stock, but the fact that, do you see that SBI is capable of probably being the only PSU bank that could go neck and neck with some of the private sector banks, or that's still some time away?
No, if you look at all the PSU banks, they're all in some kind of merger activity right now. The government is consolidating all of them, and they're all going through that thing right now. SBI is the only one who's completed buying all the smaller SBIs, and actually what they did was first put their computer systems in there, and then they literally, when they merged, they just had to change the hoardings and the stationery. They'd already put the systems in place. So they're the only public sector bank that is actually in a position today to take on anything, whether it's an NBFC or another bank. The private sector is obviously pushing back. There has been rumors of some of the other private sector banks who have been, they're trying to push them to buy Yes Bank, but doesn't seem to be having any takers. And it's sad. It's a great institution that had moved and looked like it was doing great things, and it's unfortunate that it's going to go this way.
Well, some of the other PSUs, Pashupati, my final question really is, are doing well too. My question is, would you go out, as you look at the system, divestment, etc., go out on a limb and try and make an investment into, say, a BPCL with the hope that the target divestment price, whenever it happens, whether it happens in April or in July or in November, would be much higher than what the current EV/EBITDA valuation suggests?
And media reports now suggesting that IOC is also weighing in to make a bid.
Yeah, so I mean, I think that the valuation that they want for BPCL, we will get it. I mean, there's even talk of Aramco buying it. So, because at the end of it all, they want to distribute petroleum into the country that's going to use it, and we are certainly there. Again, people are a little apprehensive about the auto sector simply because of the dynamic shift into electric cars. And I think that's the bigger challenge than, do you want to be a petrol pump owner or a petrol pump manufacturer in an era where, electric cars are coming? So there's been that disruption which we need to take care of. And I think that's the real fear rather than anything else. But yeah, I mean, all you see what has happened in HPCL, the answer is very little. I mean, except for the financial transaction that took ONGC's money out and gave it to the government. I don't think there's very much shift in the management. It's still being run separately. There's no real merger synergy as a result of it, except that the 30,000 crores or whatever that they spent is now off ONGC's books and is with the government. So in BP, I don't know what's going to happen. I saw the press of IOC taking a nibble, so let's see what they do. It definitely makes sense to have more, bigger players, certainly in as we go out, because you need to have more petrol pumps, that's for sure.
All right. Great talking to you, Pashupati. Thank you so much for joining us.
Thank you very much.